Hey guys, Mike here. So have we, and I mean we, I mean the institutions, finally rotated back into growth stocks. You know, our EV stocks, our charging company stocks, our alternative energy stocks. Say that twice fast. And you know, I never left them. I built up on my positions, as I know a lot of you guys did, and so it's paying off right now. But is this just a short-term deal, or are we actually done a rotation back into it, and we're going to see it start to climb throughout the rest of the year? And basically, if this is happening, the other question is like, why is this happening now? Is another big question to ask. And so I'm going to take you through all the data to show why we've started to move back into it, and is this going to go ahead and continue, okay, and stuff we got to watch out for. So let's go ahead and get into it, guys. And so what we got to look at here, and this is an easy way to figure out if you see rotation, is to go into like Google Finance or something and start pulling up funds, right? So here we have the Vanguard Value Index Fund and then the Vanguard Growth Index Fund, okay? And you can see year to date basically how value took off there in February when the sell-off started, and then it outperformed growth, of course, by quite a bit. But look at the very end, see it dipping right there? So then, if we sit here and look at the 1 month, all of a sudden, see the difference here? All of a sudden, growth has taken off by a mile, okay? It's up almost 7%, while the value index fund is actually going to the negative. And so the next thing we have to do here is look at the data that actually affects the value stocks and the growth stocks to understand why is this happening and why did it happen in the first place, right? And so first what I'm showing you here, guys, is the weekly economic index, which comes out of the Federal Reserve Bank of New York. And what it is an index of 10 indicators of real economic activity, which is scaled to align with the 4-quarter GDP growth rate, okay? And what it represents in simple terms is consumer behavior, labor market, and production, okay? And so as you can see, from April of last year, this did a slow, gentle, basically, recovery up to zero. And then as soon as the growth stocks started to sell off, because what we were fearing inflation, all this other stuff, boom, value starts to take off. This chart just takes off, ripping and roaring, right, over like 10%. And then as value starts to cool off, growth starts to take over, guess what? Here comes, it starts to decline. Then we go over to the 10-year Treasury rate. Well, what happens? You can see as growth sold off, the Treasury started booming. Then all of a sudden it started going sideways as value has slowly cooled off. Growth has come back. What has happened to the Treasury yield? 10-year Treasury yield, which is very important, it has cooled off all of a sudden and kept declining. And I've showed you this before, but as soon as high growth started to take off, actually the day before, excuse me, Bitcoin, Ethereum, all of them lost almost 50% of their value over the same time frame. And as you can see right here, to drive the point home of what this looks like, you got NEO, STEM, which is a smart storage unit for energy for the future, basically. ChargePoint, we all know who that is. Then I picked a financial, one most popular, Citigroup right now, and then Barrick Gold. Everybody said, go into gold when inflation happens, right? And you can see this is the monthly chart, and you see how far down the bank and the gold stock has started to go. They're going into the negative now. But then you look over and you got NEO, STEM, and ChargePoint up between 30 to almost 82%. I mean, STEM's been on a roll, let me tell you. I'm glad I bought that stock a while back. But then you look even more at the 5, then you can see it even better, right? I mean, you got the gold and the financials down almost 10%, while you got the other ones up, the alternative energy stock or the EV stock up between 5 and 12% at the same time frame in the last 5 days. And so, of course, what did you have happening? What does this all show us? One, you know, when it comes to growth stocks, like the trifecta happened against growth stocks, which is, you know, the economy starts to open up, it's red hot. People are thinking, oh my God, the inflation numbers are rolling out, they're super high and all this other stuff. And they're really afraid the Fed's going to raise interest rates, which is terrible for growth stocks, bad environment for them. And lo and behold, you know, GDP is going up. But then all of a sudden, things kind of start to flatten out. The Fed's not moving. They're like, hey, we're good. We're going to keep rates till 2023. And of course, even before we knew that, they've been saying that. So we kind of knew that's what was going to happen. They were going to keep buying back the bonds and the other stuff they're doing in the repo program for $120 billion a month. And so all of a sudden, value starts to taper off. Crypto, which people were using supposedly as a hedge against inflation, which I don't really understand that one yet. I'm still working on that one. You know, that I was going to go, well, inflation is transitory most likely. And because, as I'm going to show you, and something we got to watch out for, all of a sudden what happened to commodities? They started also to turn south as well. And so coming down. And so people say, whoa, what are we going to do? And I say people, I mean the investment firms, institutions, started rotating out, hitting into the growth stocks, right? Crypto just took a dump, 50% down. Where did that money go? It didn't just go into a bank. That started flowing into growth stocks as well, okay? And so I'm going to show you some charts. I'm going to show you something that I think we need to be, and this is what we got to really watch out carefully for and pay attention to. Think, well, is this just a short-term thing here, and then we're going to rotate back or rotate into something else, or not? And this is the commodity prices, guys. As you can see, year to date, you know, they did this massive run up. Then as soon as growth stocks took off, May 13th, they took a dive, kind of came back up. Growth stocks kept going. They took another dive. And so then you look over the last one day, though, and what's happening? All of a sudden, they're going back up. And so, of course, this is important to understand. You know, one reason they took the first dive was, I mean, growth stocks started going back up, but also they had just done such a massive, massive run up, right? And then people rotated out of those as well into the growth stocks. So then all of a sudden they started coming back again, took another massive dive. Of course, China's coming out saying they're releasing their reserves and copper and all kinds of other stuff. So that kind of freaked people out as well. But a lot of people think these commodities are going to start making another rise up. Now, whether they're right or not, I don't know, but that will have a huge effect on the economy overall. And so it's something we got to keep an eye on as well, because if they start to go back up, as you saw when they rose before, you didn't see growth stocks doing very well. And so, you know, we got to keep an eye on that. Everything I showed you here, you know, the interest rates, all that stuff. But the question is it short term? The other big thing is you got to think about this. What's happened in this month? The Russell reconstitution, okay? And what's in the reconstitution this year? A whole lot of growth stocks, a lot of high growth stocks. I mean, a boatload of them. You got Palantir going in, you know, you got some stocks going into multiple indexes. And so you got to understand that is hundreds of millions of shares, okay, that have been bought up. That's what's causing a lot of this? And what's going to happen, you know, once it's over? I think it's June 25th, and then they'll end it, and then June 28th when they roll out the new indexes officially, you know. And so that's something else we got to look at. How much effect does that have versus actually this is a real rotation that's going to keep going on for the next 3 to 6 months at least. That's what we got to see, guys. That's the big thing. That's why it's so hard to say, ooh, is this going to keep going? Now, what am I doing? You know, I didn't sell my core positions to begin with during that massive sell-off. And I even added to the positions. So I'm sure as hell not going to be selling any now. You know, I'm holding on to them. That's just the way it is. They're there, great, you know. And so love to see them keep going up. That's fine with me. And so we'll see, but it's almost impossible to predict what Wall Street or the institutions are actually going to do in this. But the good thing you can look at is keep looking at those kind of index funds. And when you see them turn and cross over each other, you know there's a rotation taking place. Whether it's, you know, temporary or going to be going on for a long time, we'll have to see. But hey, if you did get something out of it, go ahead and blow up that like, subscribe button for me, guys. I really appreciate that. If you want to come over and join the Discord and our conversation and get daily news updates and stuff, you can hit the link down the bottom. Really appreciate that. And I hope you guys have a good Sunday, and I will see you tomorrow.